This is Impact with Don Wenner.
All right. Well, thanks everybody for joining us here. So, Andy and Tina, you mind starting us off? Tell us a little bit about yourselves and how you came to be here with us today. A little bit about your career and background.
All right, I'm Andy Glemser. This is my wife, Tina. We met out of college at our first job years ago down in Malvern, Pennsylvania. And at that time, I left after a couple of months to start a landscaping business and eventually started an IT consulting business with my brother, Ray. So this was back in 1987. So I was involved in that business with Ray for about 30 years. And Ray had since taken over the business and sold my interest to him a few years ago. And now I just do some independent consulting. That's my primary job, but on the side, my wife Tina and I invest in a single family real estate work. I do the physical work and Tina does all the people interactions. She's good at that. So that's kind of my background.
Okay. So my name's Tina, married to Andy. You didn't say how long it's been. It's trying to be safe, but about 27 years. And I used to do marketing in a previous life, and now I just manage the properties that we do have, and the rest we invest with Don in properties that I don't have to manage. So that's good.
Tell us about your project in your garage.
I'm not a mechanic, but I'm in the process of building a Jeep. My son wanted to do a father-son project with me, and about 3 years ago he said, "Dad, we should get an old Jeep and fix it up." And we did that. We bought an old Jeep, and everything about it was bad. So we bought a new frame to start, and then basically ended up buying all new parts. And my son was really not all that interested in doing it. So while it is still a father-son project, it turns out I'm the son. So I'm working with my father, Ray Glemser, he's 85, and together we're doing it. So we're almost done. I'm declaring it mechanically complete. It doesn't run, but it looks like
and we're all like,
it looks like a Jeep.
No.
Actually, we just got to get it working.
And it's all 3 garages. It's not just one. It's a big Jeep, 3 garages.
And what's the real completion date you're expecting?
I arbitrarily chose July 4th for the first run, so it just gives me something to focus on. It may not look good, it may not have be painted the way we want it, but I want to be driving it by July 4th. That's the goal. Yeah. Actually, when we originally did it, the intention was to put it on the back of like an RV, be able to take it around the country, and we always talked about having it down in St. Augustine, trying to get up and down the beach there after the hurricane. Yeah. So someday it'll make it to St. Augustine, I'm sure.
Awesome. Cool. Appreciate it. Ray, Sue, you want to take over? Tell us a little about your background.
Yeah, my name is Ray Glemser. I grew up in Philadelphia, then went out to Bucks County in Warminster, then came to Lehigh University, which is how I came to Bethlehem. I stayed for 3 degrees, computer science and industrial engineering, computers applied to manufacturing. Then Andy and I started a company in IT, applying IT. It now focuses in life sciences and compliance solutions. And as Andy said, we also got involved in real estate. And I'll talk about that in a little bit. But when I came to Lehigh Valley, I got started. We started, PhD, the real estate work, and then I met my wife, Sue, and we've been married for over 20 years now.
21 years tomorrow.
We all know
Today. It's today.
It's today.
We're married 21 years today. Happy anniversary. It's today.
21. Wow. Congrats.
Yes.
Congrats.
Should
Awesome.
have let her go first.
Yeah, exactly.
So how about you?
I've been married to Ray for 21 years. Prior to that, I worked at an investment company and stockbroker. So I was a stockbroker for 25 years, and I ran the retirement accounts at Lehigh Securities, which was then bought out by 4 different banks, finally by Bank of America, and that's when I retired. And then since then, I've been a wife, and I have 2 children, and that's it.
So then I'll talk about real estate a little bit. So then I attended Lehigh Convocation for graduation, and Donald Trump flew in, and way before we have the current Donald Trump.
He was president.
And no matter what you might think about Donald Trump, he is a very dynamic speaker, right? So he came in and he gave a wonderful speech. Turns out that his brother went to Lehigh for a year, then went on to the Wharton School, and then eventually died in a helicopter accident. And somebody, when Donald Trump had a book on the art of the deal, somebody made the connection that his brother went to Lehigh and got him to come to Lehigh to kind of pitch the book. So it was about business and it was about deal making. And, say what you want about the man today. He was very dramatic in speaking, very insightful. And he had two things that I remembered always. The first one was any deal, business deal, whether it was real estate or anything else, had two components. It had price and terms. And if I give you your price, I can put any term I want, put a lot of terms on your deals. And so I remembered that. And the other thing he said, a lot of people, when they're trying to do a deal, they don't pursue a deal because they don't have any money. So he said, there's always money. So really pursue the deal and then get the money. So I remember walking out of the Stabler Arena at Lehigh University, looking around and wondering how much that building was that they made. I wondering how much this land is worth. It really got me involved in real estate. And I came eventually to a German professor months later, and he was interested in getting rid of his house. And so I told him, I'll give you your price, but I need a second mortgage because I was making $300 a month. I had no money, right? I was a student at Lehigh. But I went to the convocation, I listened, and I tried it. I tried what he said. And sure enough, he gave me the second mortgage, and then I got my brother Andy involved in it. And I'm thinking maybe 5 more years we'll get another one. And Andy's involvement, within a year we had 3 more. So we had I had a half interest. Instead of having one house, I had half interest in 4. So I had 2 houses very quickly. So I saw really working in team was pretty good. And then we kept going, and we had a bunch of student houses, and that we were trying to pay it all down, get it all cash, make it like the way we would live in it, right, and everything. And then I decided, okay, I wanted to try to do something else. And somebody had mentioned that Don Wenner was in town. I said, well, I was going to buy another townhouse and diversify from Lehigh University. And somebody said, well, Don's actually, if you give him a loan, he'll be able to, he can buy a townhouse for you and you'll get 10% on your money. I thought, 10% on my money? There's got to be something wrong with it. So I was getting maybe one half of 1% of my money in the bank. So I went out to meet him, and then we went to see the house, and we saw the project manager, and we walked there. It was in Palmerton, right? And it was in Palmerton. And his house, this was in 2012, and that house was in much better shape than any student house I ever bought. And I remember Sue saying, there's no way we're going to invest in this. This is not. I said, no, this is very easy to fix up. This is much better than Andy and I had done in the past. So we basically did a mortgage, right? And sure enough, 10%, when the whole deal was done, we got 10% of our money back. So I'm ready to get my money back. And John said, hold on, there's we got a couple more houses here before you put your money back. Did you like that deal? So we went to 2 simultaneous houses again. We did those.
And they were all nice houses in nice neighborhoods.
Yeah, they were nice, right? And then he said, hold on, well, we got a fund, right? There's an outside fund that we went to, and I was able to keep putting more money in. You don't have to go one house at a time. We can put a fund in and we can get a bunch of houses. So we did that. That was an outside fund. He actually attracted my banker from Embassy Bank, Jeff Sella, to come to work for him. Or he was doing things on the side, but he was pooling investors together. And then eventually, when that looked pretty good, he said, well, why don't you bring that into my own fund, which is what we did. And I just kept adding more to the pile as we went. And then we invested in other properties. And then I was able to say, so I looked at the returns he was giving me. I looked at my returns with Andy. It was 7-8%. We were getting much, much higher returns as a silent partner. So I think we should, Andy and I think we should sell everything we have and go with that. So we've done that, and we've had rates of return from 10% to 25, 35%, just fantastically successful real estate. So, the thing I like about working with Don in all of this is that he treats me better than I treat my customers. He treats me as my best customer, and he's always delivers on what he says, and the returns were superior. So I basically put everything I have into the different, we can talk about what those tools were, but John just proved himself every step of the way to the point where it was so far superior to the model that my brother and I were able to put together that we just sort of cashed out, said we're gonna go on this ride. So we're very, very impressed with what you've been able to do. And we do like because we know real estate.
Yeah.
Building dreams and solving problems in real estate was something that was very easy for us. Why I focused on IT, to really have the real estate roll up into something much, much bigger. Part of a really exciting company and program.
Awesome. Thank you. John?
Hey. So my name's John Miro, native to the
You're
area.
not a brother over Andy.
Not, that's right, I'm not a brother. Although, did we not all attend Lehigh University
We did. Yeah.
in engineering? Close enough.
It's
It's
a brotherhood.
It is a brotherhood.
So, native to the area. My wife Mary Ellen's not able to be here today.
Why is that?
She is running the London Marathon this weekend.
Really? Wow.
Wow.
She's a very serious runner of these last 10 years. And she's accomplished a lot in running. We both stay very busy in both vocation as well as avocation, and I'm proud of what she does in both fields. She's been a teacher and an administrator and a principal in the Allentown Catholic school system all her life, and she refuses to give it up. She keeps on doing it, and she does a wonderful job. She really gives a lot to the process of educating young children, and she's very hands-on. One of the projects I'll just briefly mention, one of the projects she did years ago was when the space shuttle program was going along at a pretty good pace. I'm into racing sports cars. That's my avocation. So she runs racing. She took my racing van for a few months and had her father help convert it into a mocked-up space shuttle, complete with articulating wings.
Wow.
This
That's
is just like a
impressive.
third-scale space shuttle. And she used it as a teaching tool for these kids. And actually, she had set up a mission to, where would a space shuttle go? I guess it's sort of the concept of space. She set up a mission to Mars or whatever, and that was on the other side of Pittsburgh. And this space shuttle got put on a flatbed truck, and all the educators and the kids went on a trip across the state, met with the governor's wife, and had the space shuttle mock-up. And then they landed the space shuttle in Mars, Pennsylvania, as a matter of fact. That's what it was. It was Mars, Pennsylvania. And then came back. And so she did all her life, she's done those kinds of hands-on, really intensive. She put so much of her time and her effort into teaching kids. So she's a great educator.
I'd like to meet her next time.
Yeah.
Yes.
Yeah, make sure you tell us about her racing and how it kind of came to be.
Yeah, absolutely. Yeah. Well, should I tell you that?
Yeah,
or
go ahead.
should I
Tell us a little about that.
Well, yeah, it's I had mentioned that she just started racing around 10 years ago. She actually lost both of her parents within a few months of one another. And she was very too close to her parents. And she was there every day. And so having lost them, it was a difficult period of time. And she would go out on walks just to clear her head. We live out in the country. And she realized that how therapeutic it was to just get out and walk and think about life and think about what happened with the parents. And then she started to put in a couple miles doing this, and then she thought, well, maybe I could just run and jog instead of walking. And so this whole thing, she started to be out and put on miles, and she, well, maybe I could do a 5K race. People get together to do this. I don't have to do this alone. And so one thing led to another, and she did 5K races and 10K races and half marathons and full marathons. And that's how it all came about, as a means of seeking therapy for having lost family. And now she has done a half marathon in all 50 states twice, and she's on her third round.
She's gone over the pond to do.
Yeah, that's right.
More than that, yeah.
She's done a full marathon on all of the 7 continents of the world. And now she's completing the Abbott 6, which is the world's 6 biggest marathons. After London, there'll be one more, and that'll be the Boston Marathon next spring. She'll be doing that. And all kinds of other stuff in between. It's just amazing to see her at our age put that kind of energy into doing something that has meant so much to her.
How long ago was it that she started?
About 10 years. And she's blessed to have the kind of makeup and stamina and strength.
Yeah.
And it gives me a lot to worry about.
Yeah.
So I've been in engineering all my life, went to Lehigh, and following Lehigh, I went to MIT for an advanced degree, and came back to the Lehigh Valley. Worked in engineering. Eventually, along with 6 other partners, formed up our own engineering consulting firm called ConMech. The idea was originally just to do engineering consulting, but we ended up in the manufacturing end pretty quickly. So we started to do, worked on big industrial rotating machinery, gas turbines, and compressors, and went from just consulting work to making parts to making new complete machines here in the Lehigh Valley. So it was quite an experience. Did that, and got out of that. So I've been an engineer and I've been an entrepreneur in that sense.
Entrepreneur of the Year for EY.
I was fortunate enough to be recognized like that. We had one of those pretty fast growing companies, Don, but not like DLP. But it wasn't bad. So we were recognized, and it was nice. I've had a restaurant. I've had a.
Tell them what restaurant.
Do we really want to get into the detail?
At least the overview on it, because it shocked me when I heard it, at least, and probably some of the people in this room have probably spent some time there.
It layers into racing. I've raced along with being an engineer. I've raced cars all my life, and I've worked my way up to the point where I've been able to race with the big boys, as I call it, Daytona and Sebring and Pocono and Watkins Glen. And, so it's been an important part of my life. And what was your point, Don?
The restaurant.
The rest.
Oh yeah, so that's why I wanted to bring the racing in, because when I got out of the ConMech company, we sold the company. It ended up ultimately being owned by General Electric, which was a nice achievement. To have built up something from scratch with my friends, it's little guys from Pennsylvania, right here, right? And we built up something that was of such value to a big company like GE. It's something that was of great pride to us.
Yes, I can imagine.
To have done that. So, but being in racing at the same time. So we got out, and I wanted to spend some time focused on racing. So I had some racing friends from Ohio. They were actually field development group. They were kind of more of a builder than a real estate developer, but got involved with them, and they were racers. They had professional racing operation. So I had this chance between my engineering and racing, got with those guys because I wanted to do racing, but they also made their money in development and building things. And they had this chain, this national chain of, ended up being over 100 sports bars called Banana Joe's. You've probably all heard of Banana Joe's, right?
Banana Joe's in Allentown.
Yeah, so that's I got involved with these guys, and I was racing cars at a very high level at that time. As a matter of fact, I ran in the race that Dale Earnhardt Sr. The last race that he finished before his death. I ran in that race with him and his son. So I mean, I've had these wonderful opportunities, and but anyway, that's how it all came about, and I got these guys involved when, what was the name of it? Jillian's Billiards Club had been involved with the railroad station in Allentown after it was B&G Station Restaurant.
Oh,
Grew up around here, you know all these things.
Yeah.
And Bruce Rotherford owned B&G, and it was a really great restaurant.
Mm-hmm.
Then after he got out of that, Jillian's Billiards Club took over. They left, and there was this building. Well, me and my wife were always in love with that building, the old train
Here we are as
station
well.
in
Yeah.
Allentown.
Every time I drive past it.
So it became available, and I told my racing friends and business, because I got involved with their business a little bit too, helping them out as a business development person. So why don't we put a Banana Joe's here in Allentown? And they did. Shortly after that, these guys were wonderful to race cars with, but when you're in business with somebody, you find out more about them and how they run their business. And I really don't do business that way.
Mm-hmm.
It's kind of like the opposite of the way Don does business, the way these guys did. And I had to discover that the hard way. So I wanted to back out of that involvement, that investment. So I took on Banana Joe's. To get away from them and their company, I didn't want to ever be in that business. I'm an engineer. But to protect my investment, I took that business in exchange for my investment and let them go back to Ohio. and I did my best to run it. So that's how that went. I ran it for 6.5 years, I guess. Oh, I had a professional management team of people in the hospitality business that ran it for me. I just went down and during the day and took care of the landscaping and all the building. I love doing that kind of physical work, and then they ran the business at night. So.
Do you still own the building? Or?
No, the Rothrocks owned the building.
Oh, interesting.
Yeah. So it was and that was a great relationship. It was a really neat experience to not just do engineering, but then to do racing stuff, and then to do this other type of business. And it's in the public sector. I'll never go back to the public sector.
Lesson learned there.
But the thing is, I was determined to do it, and that's a tough business. Banana Joe's, that's a very difficult business. But I wanted to do it as best as you could do it. So I became friends with the mayor and with the police chief, and with the fire department, with the health department, with buildings and codes and every department in the city. I wanted to work with, and that's how we did it. We did some joint projects too with the city for families and whatnot, and car shows in our parking lot. Mm-hmm. When the Indy cars raced at Nazareth, they came down to Banana Joe's parking lot. We had tire change competitions and stuff. We did a lot of. We were part of that downtown 500 thing that Allentown used to run.
So you know Mario Andretti?
No, Mario Andretti, yeah.
Nice.
Yeah, so we did a lot of stuff in life, engineering and racing and this restaurant touring, and now I have my own engineering consulting firm that I continue to work in engineering, servicing the energy sector, oil and gas, and doing what I enjoy, working on big, highly engineered rotating machinery like gas turbines. So through all this, as far as investing, my wife and I learned a lot about traditional investing. And like most people learn, eventually if you do it long enough, you find out how much you don't like it. And you look for something better. Sure. And I'm not sure if you want to have that discussion now or...
We'll come to that. Since we're on you kind of are starting now, one thing none of you guys have talked about yet, and I won't tell your children this as your children. So obviously, I know all of your children and a big part of your lives, and so maybe that'd be a good lead way into investing is talk about our children a little bit and how you've involved them in here with DLP, with investing, and how you're kind of thinking about bringing them up to learn the lessons that you've each learned in the world of investment and otherwise. So, you guys want to start us off there?
Sure. Okay. So we have 3 children: Morgan, McKenna, and Drew, and seem like children anymore. My youngest Drew is going to turn 20 in a couple of days, and my oldest Morgan is 24. So our whole lives we've been worried about college educations and how we're going to pay for it and such, and that's really why Ray and I originally got into buying rental properties for students near Lehigh, and the goal was to be able to save money for their education, and that's what we did. And when we did sell that, eventually that money did pay the education. But along the way, in addition to that money, we were putting money into 529 plans, and we also transferred money each year. I thought that our business was doing very well. We had enough, positive cash flow, and I knew you had the ability to gift money each year tax-free. So we would, at the end of each year, we would transfer money to our children's name as part of our own little long-term, we call that transition, asset transition. So we ended up having cash, and in the end, we didn't really know what to do with it. I've invested money directly in stock markets. I never had success in that. My success always came from just working hard, billing hours, developing properties, and the harder I worked, the more we would do. The easy money never came our way. When we had an idea to invest in something, it never worked. So we didn't know what to do with the kids' money, and we just had that sitting basically in a bank account. And then through our relationship with Don and DLP, we learned they're not accredited investors, so they can't invest in the private equity funds. But there is a vehicle for them to invest in the notes. So that's what we've done a couple of years ago. So they're actually clients of DLP as well. We have all of them have money, invested, and my son has really taken an interest in real estate. Now I've always done a little bit of work on the side, but it wasn't like a nurturing process of teaching him real estate. We would just go out and do dirty jobs on projects, So he's learned along the way, but he really has decided to pursue a career in real estate work, whether that's just in property management, development, or being a realtor. And a lot of that comes from Don and seeing what Don has done and what DLP has done. And he's been very fortunate to have an opportunity to work here as a co-op last summer, and he'll be back here again in a couple of weeks this summer. So I think that what I've done with him is kind of teach him some basic work ethic, skills, and ability to do physical jobs. But I think what he's learning here is how to really run a business in real estate, ventures. So it's been a really great for us, not only financially for DLP to provide a savings mechanisms or an investment mechanism for my children, but even more so directly participate and learn, and I think motivate them and inspire them.
Awesome.
Yeah, we have two children, Ray and Julie.
Julie just walked down the hall.
Julie's 21. It's hard to believe our kids are that old, and Ray is 20. And Julie goes to Immaculata University as a marketing person. And so Ray is at Stride College, and he's looking at some kind of career in trade or the Army at this point. And he's working at delivering at a delicatessen and doing food preparation and delivery and things like that. And he enjoys the activity, moving around and stuff. So they're on their way. It's nice to see that they're getting some career interest and starting things, earning a little bit of money and stuff like that. Like Andy said, we tried to involve them in our IT business, and so they would do administrative work in our office. They'd do some copying. They do some just to see what the professional office was like. So that was very important. And then it was very important. They worked with Don, Ray, rehab. He liked the physical work, so he'd rehab some buildings. Which was a lot of fun for him. And then Julie has been doing co-ops here in the marketing department. So we're very thankful that Don has allowed our children to see a very professional organization. It's very hard for people to get started in something, or a lot more possibilities for children to do things today than what was available for us. So just getting them exposed to things. I watched what Don has done, and I've opened up our business now to other people coming in, neighbors and family members, to do it, just to be exposed to computer science. It's just very important to do. And I watched you do it, and I didn't realize how it's very easy to do, right? Yeah. And then as people, you never know what kids are going to pick up or what they're interested in or what they really learn. And our kids are, I think they do understand real estate. And our goal is over time that they would each have some real estate, personal real estate that we could help them with, as well as, become investors in your company. They're just a little early stage for that, but they are starting to pay attention and ask the right questions. And I think they'll be real estate in their future. Yeah.
Awesome.
Yeah.
John?
So we have one daughter, Janelle. We're very proud of her. She went to Moravian College, and then she got herself into Georgetown University and got a sports management degree. And since then, she's been working for the USGA, the United States Golf Association, over in Fort Hills, New Jersey, which is just a fabulous job for her. She does a great job, and her main focus is that her small group basically put on the U.S. Open every year and U.S. Golf Open. So she's very happy with that. She was away a little bit, but she's back in the area now, living in Easton. But when she got out of school, she wanted to have her own place, and she ended up purchasing a little 125-year-old home here in Bethlehem. Spring Street, exactly. And she had it for 2 years, and we were proud of her that she was willing to take this on. When I was her age, I wanted to do something like that, but I didn't have the courage to take it on. But she did. She had a little support from mom and dad, but she had that for 2 years, and she did a beautiful job of. It was in pretty good shape when she got it, even though it had the age that it had. But she fixed a lot of it up and went through it and kind of refurbished it and got it in very nice shape. And then she wanted to, I believe she moved out of the area briefly, and she needed to sell it. She went to Hoboken, as a matter of fact, where there were a lot of 20-somethings riding bikes and running, and she did all those things. So anyway, and her work was over at that end. But she enlisted the help of Don and DLP to sell that little house in Bethlehem, and went wonderfully well. And I should also add that Don and DLP also helped sell, under difficult circumstances, my wife's sister's house down in Westchester. And as a matter of fact, in a different period in time, DLP also helped us sell a friend of my wife who had passed away. She was single, so that was difficult to process that whole thing. So we've had nothing but tremendous support and good experiences in these difficult sales situations. But Janelle did well with her sale, and she took that money, and she's an investor, a young investor with DLP. And when she started out, she was skittish. She didn't really know what she was getting into, but she's learned all about it now, and she loves it.
Dinners.
She comes to the dinners. She was there last night with her boyfriend, and she's added to her investing, and now she sees how it works, and she's so passionate and excited about it. So it's neat to see, because a lot of us investors, at these meetings, we're mature, shall we say? It's nice to see these.
Nice way to say it.
It's nice to see these kids
Yeah.
come along and be the future investors of Deal. I love to see that, and I think I'm beginning to see others too, as you all had mentioned some. So that's really good, and we'll look forward to the future of more of that.
You've all referenced somewhat indirectly, but certainly in a way when you were discussing your kids, certain principles that seem to have gotten you through when you first started and now through to today on a long-term scale. So what are some of the things that have been key principles to you, and did you develop those over time? What are some of the things that you're looking to help and what you've instilled in your kids that you would want to see continued on that have helped you to be successful?
I'll comment on it. The first thing that came to my mind as you said this, and I've always felt this in our IT business, and I've talked to my kids about this, is that success, whether personal or like financial success, is really a byproduct. If your goal is success or you want to make money, you make decisions for maybe the wrong reasons. I think if you provide a good value, if you do the right thing, if you treat people the way you want to be treated, success is really a byproduct of that. And that's something I actually see very clearly with DLP. And it's not just my original involvement was with Don. I got to know Don first, but everyone I meet here, it's just an organization of vibrant, energetic people that treat me like an excellent, customer, like a friend, a partner. And I believe that DLP is actually doing, what I said. And I've talked about my son earlier, and trying to teach him certain things. What I've learned about kids, you can tell them things all the time. You can tell them something, but either maybe they are getting it, but you as a parent don't always feel like they're listening. But then they see it in somebody else, right? And then they get it. So my son comes home and says, "Dad, you should see what Don's doing. If you work really hard, you can do the things that I've been saying, but it takes.
He's trying to inspire
in a
us.
place like this, he's actually learning, or maybe he's at least communicating back some of the things. So collectively, we're all building, him together. But that's really the thing that I feel is important. If you want to be successful, do the right things, and success comes as a byproduct.
That's awesome.
Yeah, we try to boil our work ethic, our religious background, everything to a couple things that the kids could understand early on. And so there were three. Work hard, which is what Andy said, that really we got from our parents. Don, you would understand that. Be kind. So it's very important that, as you become successful, that you have to remember that other people have different levels of success, or how you're coming across, or how someone might take something. And then the last one was to think, so you have to think about where you're going and what you're going to do. So we try to boil it down into one or two word phrases. And we've been saying that same thing over and over and over again. And I was talking to my dad once, and I said, well, I didn't realize how many times we'd have to repeat these things over and over. They said, yes, you have to repeat it 1,000 times. But it is now 2021. They are starting to get it. It's a really pleasure. They are working harder, and they are very kind to the people around them, and they are starting to think at 21. And then, as we said, there's a lot that you can go into, but the basics are still the same. And as we go into them, then I think those will encourage. And then there's the technical or the financial parts or whatever the industry parts, whatever they're going to do. And so they have a lot to choose from, and they're starting on the way. So it's a fun time to watch them.
It's funny you say that. Larry and I are in a small group focused on parenting young kids, and we're reading a book called The 14 Gospel Principles of Raising Children, or something to that effect. And that's one thing to talk about is how you don't think it's a process to raise kids. You think you tell them something, you don't tell them so many times, again and again and again and again and again. But that's what it takes. The same simple message over and over and
And
over.
I asked my dad, well, how did that happen in our family? So, well, we would sit down at the dinner table. So it was very important to eat together. So we do that in our family. We get together, we eat, and we talk about things, and that's where you repeat it. So that's very important.
That's awesome.
We were laughing because, it's with some, you just think, well, how many times do you have to say it? And, you really get to it. And your kids, very young, they go into a phase as it gets a little older, and then they sort of like come around again a little bit. My wife and I were in church one time, and the priest was talking in the homily. He was saying, as parents, you may find that you go through these things, and then, you die, and after you die, your children reflect back, and I'm like, Sue, that's it. Our kids are going to know this after we die. They're still going to remember, like, where there's hope for us after we die. But it is funny now. Like, that was in high school. Now you can kind of see it coming around now. So you never know. You never know the impact it's going to be.
And it's a marathon and not a sprint.
It is a
Oh,
marathon,
it is.
but it's been great to watch them. They really blossom now. Yeah.
Awesome.
Well, yeah, like everyone says, it's parenting is the most difficult job in the world. We don't go anywhere to learn about parenting. You learn as you do. And I think a lot of people end up doing a pretty good job. They figure it out. And Janelle had that advantage, I should say, of growing up in a Christian household. And so that provided the platform, I think. The way, mom and dad live. I mean, these kids observe, and they don't just listen to what you tell them, but they observe what you do, and they know what you do. And, we hopefully we're good models, role models for her growing up, and we tried to give her the right directions. Obviously, the things that I've heard Andy and Ray say, we and yourself, Don, we agree with all those things. You try to instill character and integrity and all those virtues that are important for a young person. And we put her in a good school system, try to put her in the right environment. But I'm proud to say that she, and pretty much turn her loose, and because ultimately the kids are going to decide on their own path. And we tried to give her all that we could give her without telling her or demanding. And she followed the right path and follows the right path in life to this day. Keeps herself on a narrow path of doing the right things. She understands the importance of the values that, again, you guys mentioned, as far as finding something that you could be passionate about. You love doing it, you do it well, and the rest of it will take care of itself, the success and the financial part. And that's how she pursues her life. And, we're thrilled to see that. And we know that she's on the right path. She'll stay on the right path. So, yeah, we feel blessed.
Drew just called me from school the other day. I didn't even get to tell you this. And he said, I just wanted to call and tell you and tell Dad how much I appreciate you. He said, he's got a friend there that's kind of struggling in a lot of different ways. And he said, I just think about, like, I compare my life and my upbringing to what they're going through. And he said, so basically I'm just calling, to say I appreciate you. And I was like, no money? You're not calling for money? No, I'm just calling for that. I'm like, yes! So that was a nice thing to, like, for me to hear that he actually processed that. He thought about it. Not only did he come to that conclusion, but then he called to even let us know. So
Thanks for passing that on.
That's all about learning.
Wanted to go back slightly to when we were talking about the kids working here, and one of the things that I thought was impressive is that you basically opened it up to our kids to come in and work, and not just from the fact of hiring them to do work, but to, like, be that transparent that you're going to have, Drew in there touching papers and things that are yours. So also last night when Andy was going to speak, I was thinking about how transparent you are in the other respect of having your investors in mass in a place and have potential investors come in And you know how masses work, right? They can be like positive or negative inertia. And, you know, so you have a lot of confidence in the fact that getting investors together is going to work. And then bringing in new people to these people who obviously, if they're not happy, will certainly, you know, show the potential to the door. So, you know, I think that instills confidence in us in terms of investing, because we just know that, you know, we feel it's very transparent.
So these principles that you talk about instilling your kids, the principles of hard work, and is what led a lot of you guys, you know, here, and that you guys did the hard work of building your wealth and bringing it to be able to invest with us. And then we've been able to have the pleasure of helping you earn returns on that wealth. So, you know, over the number of years now that you've been with us, you know, how has the returns and the, you know, the confidence, I guess, in the future of the returns affected, you know, life? What have you been able to do? How's it sort of changed viewpoints, or how's it affected some of your non-work interests? How's it kind of changed life in any way for you?
Well, I'll start again.
Start.
So for me, I've always felt that if you work hard, you know, you can just make more money, and I didn't have an exit strategy. I just was going to keep on working, and as long as, you know, I worked, you know, good things happen to us. But as I've gotten older, and I'm 56 now, I'm starting to think of like the end game. You know, so although Ray and I did sell various real estate, you know, interests, and we've invested that money with DLP, we have continued to, on just a few occasions, have bought some, you know, investment properties. And as everything we do now, if we have, say, a 20-year mortgage, you know, that's going to be paid off for us when I'm 75. So it's not like I'm 30 investing so that I can retire at 60. The things we do now will impact either us very late in life, when hopefully we won't need it, or they'll be for the, you know, the next generation. So for me, what I like about DLP is that it affords me the flexibility. I can see my way now through to retirement. Before, it would be, I'd have to work on these properties, and you might think of yourself as retired, but it's a heck of a lot of work, and it's at a time in your life when that's actually very hard to do. So investing with DLP now, in many roles, is completely passive, right? I have very capable, energetic, knowledgeable people running that, and I get to participate, you know, in the benefits of that. So for me, it's changed my life, in that now I think of life after work. Because for me, even retirement was going to have work associated with it. So even though I still do work and I like to continue to work, in my mind, I feel now semi-retired, because I'm working because I like it. But if I chose not to, I have enough interest now that we can see we have enough income, steady, consistent income. So I know that, you know, I know people that have invested in, you know, high-tech internet companies during the boom and made big money, and DLP doesn't afford me those opportunities. I'm not going to make 1,000% return in a year, but what I'm going to make is between 10 and we've, well, you know, on average maybe 10 to 15, but there's been other opportunities in the past that's been up much higher than that. But we can count on very consistent, solid returns that are above what we can get anywhere else. And that's really what's changed for us, is that consistency. And that just gives us peace of mind, and takes a lot of pressure off in terms of looking to the future.
Awesome. Go right.
Yeah, so it's very similar to Andy's story. We at the point in our lives where we have more money than we're going to spend, right? So it really does take the pressure off. It allows us to do anything we want to do at any time. You can write a check, right, and take some money out of the DLP investments. Just a world of difference over 30 years with 0.5% and 12.5%. It's just it's you know, it's unbelievably the miracle of compound interest, right? And so we're okay with our health and our where we want to live and what we want to do. We have abundance now, and we share that with we mentioned our children earlier. We share that with our children. Our children are not going to have to worry, right? We know we'll always worry about them, but they won't really have to worry. We have institutions that we're involved with in downtown Bethlehem, museums and educational institutions and things like that. And we can now support them beyond what we can do. And we can travel and go where we want to go. So it's really gives us complete peace of mind, and we know that every year it's the consistency and what we do, and we put more and more into it as we go, and it's just been really just a great experience. It allows me now to I'm still going to work and be active, but allows us to have a much bigger impact on our family, our extended family, our interests, our travels, and our community. And it just makes it just allows me to be have a bigger influence and Sue on the people around us.
Awesome.
It's wonderful.
I guess what I've seen in DLP is I worked in a brokerage firm for 25 years. So I worked through 3 stock market crashes, the major one in '87. And so I've seen people's investments, my own, they go down with these market crashes. Then we went through the housing crisis, which really was the banks. The laws were there, but the banks did not follow the spirit of the laws that were written. They just went off giving mortgages to people who had no reason to have a mortgage at all. But what I see at DLP is that Don follows a specific criteria. He stays by that criteria, and he doesn't vary to make a quick profit. And so that's what's been working. So that's why I feel the investments are safe as they can be. It's not a AAA government bond, but it's as safe as you can be. So that's what I enjoy.
Yeah, so I think I sort of think along the lines that Andy's expressed a couple times, that I've always felt most of my life that whatever I get and we get and I'm able to produce for my family is going to come as a result of the hard work of my own hands and my own brain. That's how I've always believed that. And so I'm very entrepreneurial. I've done basically 4 different companies and a lot of other stuff that's similar to entrepreneurial. Worked very hard. My wife, we worked hard, and we've did okay throughout life, and I benefited, of course, from selling a small company, but investing becomes important at some point along the ways, because you really can't do everything with your own hands. You have to invest successfully somewhere. And so we had lots of investing experiences, shall we say. And the traditional investments never worked. It was always, you knew that it was just from the work of your own hands that you're ever going to get anywhere. The traditional investments were always disappointing. And you know what all the traditional investments are, the stocks, the bonds, all that stuff. So we experienced the stock market crash of '87. And then 3 of them. Then we experienced the stock market crash of 2001. Then we experienced the stock market crash of 2008. And all this other stuff that goes along with it. And I experienced even investing in this other firm that led me to Banana Joe's. And we did okay in life up to this point, but we were looking for some place that you could invest. And then we found out about Don. Early on, we're entering our 6th year of investing now, so and I think you guys are a little bit even more than that. But we learned, and we immediately were attracted to the possibility because we knew a lot about DLP. We had listened to the radio and learned a lot being in the area. We thought, well, you could invest with DLP. We knew all about them, but now you could invest with them. So we immediately got involved with Don, and it's diametrically opposed to traditional investing. We want to invest in businesses that we know are good and they're going to produce and are going to be successful and profitable, and we can benefit from it. We don't want to invest in the traditional investments, which are totally subjected to emotions, to geophysical forces, geopolitical forces, things out of your control, which have nothing to do with how the businesses are running. That's what the Wall Street casino was all about. All this other stuff, it's got no bearing on business. I find that completely mind-boggling. And so we want nothing to do with that. We haven't had nothing but that. Now, of course, it looks good right now. There's been a write-up. Crash here, crash here, crash here. Here we are now. There'll be future crashes, too. Because it's not business. It's the Wall Street casino. So, I mean, I feel very strong about this because of the experiences you go through. And we made good decisions. They were informed decisions. But that's what your options were. But with Don, ultimately you invest not just in a team, a leader like Don and his team of people with core competencies that know how to do things very, very well so they'll be successful, That's one of the keys to entrepreneurship. We know that you have that here with DLP. But then the thing you really invest in is, because every investment's a risk, right? It's always a risk. What you're really investing is the individual. What kind of a person is Don? He is DLP. And I understand DLP could go on without you. Talked about that last night. But you are DLP. And if you took a 6-month sabbatical, DLP would still be Don Wenner. That's just what it is. And so, to know that you have a leader that is a good person, that's someone you can trust, you're really investing in the human being, in the person. I mean, the business you got, he knows how to do the business better than anybody. But you're really investing in an individual. You're trusting him. I mean, everything's got risk. Well, I consider this zero risk with DLP and with Don Wenner, because he's a man of integrity, of honor, of family, and getting to know Don as you guys have over the years. We know we're probably bursting trying to get our message out to the other people in that room of 300 people, potential investors. But what we really know about DLP and Don, if you only knew what we knew, you wouldn't even be asking yourself the question if this is a good idea or not. It doesn't get any better. We're completely comfortable. You're really investing in the person, and so knowing all that, we have complete peace of mind, the opposite of our early experiences investing. Not only are we investing, but we're having a good time. It's enjoyable. As we all know, you're part of something. You're not just sending your money down the road, take care of it for me, invest in something good, and maybe we'll make a profit or maybe we won't. We're enjoying it. It's family. It's fun. It's worthwhile. It's got value. It's fulfilling. It's not just investing. It's not just getting money. It's having a great time in life. And so our life's totally turned around. And it's changed the trajectory of our life. We're not sweating the investment losses anymore, or the miserable investment gains, however small they were before DLP. So now we had dreams and goals, which we were okay in life before this, but we couldn't quite reach our dreams and goals. Now we reach all our dreams and goals. Life's enjoyable. We're able to help others. It's completely changed the trajectory of our life to the point that we had dreamed we could achieve, and now we've achieved it, and we're living it, and we feel very passionate about it. It's just so positive. It's totally changed our life, and we hope that a lot of others can benefit from the same thing.
Awesome. Thank you, John. We feel the same way. We started really very small. We started with a $50,000, $100,000 loan, a mortgage. And every step of the way, it's been negotiating with Don, the next best deal, the next best. And we've been since 2012. So it's 7 years. And it really has been started from the very first. It says, we'll give it a try. We'll give it a try. Try this, try the next thing. And everything you've ever done has just been the next level of building up just a wonderful organization that, as I said earlier, has allowed us to live our dreams. We make more money with these investments than I made with any of the other investments that I personally manage and run. It's more successful.
John, you mentioned at events you like share in the news and you're very enthusiastic about it. I had an event in my house about a month ago, and I brought about 40 friends, neighbors, coworkers together really to hear and be exposed to this. And one of the guys there, a friend of mine, he said, it's really nice of you to do this for Don. And I actually said to him, I'm not doing this for Don. I asked Don to do this for me. I'm doing this for you. I'm trying to give you exposure to something that I think is really good. What you do with it, how you decide to move forward, it's all up to you. I get nothing out of this other than I want to share information. Felt strongly enough about it to kind of initiate that. So.
Absolutely. It's the same thing. That's great that you did that. I know it was awesome.
I think too, each of you guys have talked about your own entrepreneurship, starting your own companies and doing all that. I think they see that in you, and you're younger and have a little more energy, so it's nice to be able to kind of see something growing.
A lot more energy.
Yeah. So.
Speaking of that, just as a side note, I'll just, for what it's worth, you hear stories about Bill Gates and Steve Jobs and Zuckerberg, or is that his name? And it's impressive, but it's on TV. You know, it's happening. But we've actually several times felt we're getting to watch it kind of, you know, from the inside. You know, we don't know where it's all going to go. We met Don, 6-7 years ago. He's probably in his, lower to mid 20s, and we just see a lot of growth, not only just in Don individually, but in the people and the facilities, and you walk down the hall, it's impressive. So you mentioned, John, it's just kind of fun, and we feel the same way. And I just, not only are we participating, but I also enjoy sitting back and just watching it. Every presentation is always gotten better. They're pretty consistent now. I don't see big changes. It's just kind of, you're very good at it. But in the beginning, you could really see the growth and the difference. And it was just fun to watch. And I'm really curious where it ends and how it all ends up. And I'm glad to be a part of it.
So you feel privileged to be part of it?
Absolutely.
Yeah. That's how we feel.
Awesome. So you gave us a lot of awesome feedback on things we're doing well. We definitely want to improve always. So any feedback you can give us on what we could do to improve? You just kind of gave me a little side point there that we need to get these presentations better. They're kind of too consistent. So noted.
Every time I would go, I would say to Tina, he keeps getting better. He's getting better. But now I go, that's just Don up there. You're good. You don't have to get better. I have to think about that one. I'll defer to others first. Why? Because I don't have anything come to mind.
Well, one thing that I was thinking is you had mentioned a few things about, well, this particular fund's better for, not paying the taxes, right, like deferring the taxes and all that. And I don't think when we've put money into the funds, we've actually thought about which fund would be the better one for us to do based on that. So I think it would be good to, kind of ask people what are you trying to do? And we just kind of said, and that's probably partly our fault, mostly our fault, because we're just like, yeah, Don, put it in this fund. Wow, this sounds nice. Put it in that fund. But we didn't really give it the thought process. So it'd be good to have like a little more guidance about that.
Awesome. That's great feedback.
It may be like it's kind of, we talked on the way over. We know what the funds are. There's little descriptions of them. But maybe why? Why is this one? For some people, maybe if your situation is this, if you're nearing retirement, maybe you consider this. We know that you're not a financial planner, right? You're providing these investment vehicles, and you many times say you need to talk to your tax accountants and other advisors. And I do understand they need to be different, but just helping your average investor with little better differentiation of the pros and cons relative to their own situation and needs. Maybe you're selling a business. Maybe you're selling real estate to get into this. That's different than you have money in the bank that's already taxed money. So I know it's hard probably to do that, but some level of guardrails to help people like us that really don't give. You think that we spend a lot of time and really think about this. We don't. And I can't help but think most investors are like that. You get a feeling and you move with it, and maybe don't have all the information.
Same experience. From my observation, I think it seems to me, Don, that you all are sort of slowly starting to come up to speed on this area and starting to touch on it and starting to be more helpful. When we started out, we had the same, we didn't give enough thought. We didn't really know anything about it. That wasn't really something in the early years of investing with you that was on the table. There was other priorities. But that's coming around. I think it's becoming more to the forefront now, it seems to me. But what we did was we kind of learned it on our own. And we had a chance to learn because we got involved in so many different, as you all probably have too, so many different tools, so many different investment vehicles, the different funds and the SMAs and this and that I figured it out. We figured it out. Well, wait a minute. If you do this and this, and if you balance these investments, it's almost like diversification, including the aspect of tax benefits, adding that tax benefit or tax sheltering to your overall diversification. And that's what we've done. We're pretty good now. We've learned it and asked Bob a couple of questions actually about it, and you guys have helped. So it is something that it would be helpful probably to those that are less knowledgeable. Sure. We've sort of figured it out for ourselves, but the point I wanted to make is, having figured it out, we're sort of flabbergasted at if you do a good job of that, how well you can really do for yourself by benefiting from the available equity funds that have the tax shelter benefit and blending it with the other ones. And you do enormously well when it comes to current year tax obligations. There's a lot of deferment opportunities, and then it becomes capital gains, and that's dramatic, and that's such an important tool, and I hope that does become more understood by others.
Awesome. The thing that I liked is that you were a problem solver, right? You understood finance, you understood real estate, and then we'd have a conversation and you'd say, well, I can help you with that, right? So we were thinking about doing some other real estate. So, well, why would you do that? Why don't you come with me? We'll do this and I'll give you this return. Like, well, why don't we try that? We kept going through it. So you spent time understanding what I needed to do. What I was selling something, I needed to transfer something, I needed to do a 1039 exchange or something. And so you would say, I got a lawyer who can help you try this. And so each of those steps, you were excellent on explaining, prioritizing. So I got that personal advice from you directly, from being early on, and I still get it. I'm just amazed I still get it. We're going to get some today, right? So we're going to keep getting it, which is great. So I really value your time. Once a year we sit down and do the plan. All the other stuff kind of catches up. So you've been growing and going very quickly. So getting K1s like the day before the taxes are due, like that's like right. Some of these are right at the end. I'm very understanding of that because I understand how hard it is to get all that stuff done. So in the past, I've just extended my taxes and say, whenever you get them done, I will put them in. So you're doing a great job. The paperwork can come. But I've noticed you've really been focusing on that. That's really coming. I like online stuff that you have. And just it would be great if everything were online, everything were integrated. So I love what you have. I'd like to get a lot more on there. What we do with spreadsheet, it would be great if all that were on there. So it's that paperwork and online stuff that really is like the financial stuff that would really help me. But that's a tiny, tiny, tiny little bit of feedback compared to everything else. The returns have been spectacular, right? The personal attention, the availability to speak. I'm amazed at how you respond to emails as quickly as you do. It's just very attentive to questions and issues and problems and addressing those. I think you say that we solve problems through real estate and finance is exactly my experience. Right? So just a couple things, and I've been happy to let those just write up as you put them together. Just thrilled to get things that help me be more efficient with my my own personal finances.
I think the first time I went to see the house up in Palmerton, I went with Ray. And it was a nice house. It was a nice 2-story house. It was nice neighborhood and everything. And the water pipes, they didn't turn off the water pipes. So the whole house was a disaster with water being all over the place and some other things. And I went up going, oh my God, who's going to pay for all this? And so Ray and Andy, being in student houses and college students doing everything they possibly can to destroy a house, said, oh, this is an easy fix. You can just do this, and that. This won't cost anything. But as I was walking through the house, I was saying to myself, oh, well, I could live here, except for the water pipes. And then we went to a couple other places that needed work on them, the same thing. And every house I looked at, I said, I actually could live here. It just needs some fix-up. I can't do it, and I don't understand the cost of it or anything like that. But since you have a crew that can come in and do it reasonably, it made sense to do it. So I was happy. So I do like the before and after pictures. I don't pick up a screwdriver. People are in trouble if I do that.
Hopefully our marketing team got that. That's something we need to do better. More before and after photos.
We'll get Julie on that.
Yeah, exactly.
Yeah.
I'd like to follow up on Ray's comments and reinforce what you said, Ray. I agree that down through all these years, anytime I've had to communicate, ask a question, get advice, get input, I can go to Don or Bob or Larry starting with Don, the whole team is all over helping you out with whatever comes up and helping you to achieve whatever you've got to achieve within your investing with DLP. That's always been the case, and it's really a strength. And you don't lose any time. You don't have to wait for support. It's instantly there all the time.
Yes.
So I wanted to follow up on that.
That's great.
I guess, Don, this isn't a negative or anything, but it's something that I think about as we talk about that level of responsiveness and attention. And the concern I have, or just a thought I have, is, well, can you scale that? When you talk about in 2025, we want $1 billion under management, $1 billion of assets, and at what point do we become so small investors in the big scheme of things that
You don't
that we
remember
don't,
any.
we don't. So I don't know how you'll do it, and that'll probably be a big challenge. But I think most of the people that I meet in the investor meetings, they all feel the way we feel. They feel a personal connection with you, and it all started with you. But I got to admit, it's really gone for me to many other members of the team, like Larry. Larry and Bob as our client, investment managers. This is excellent, and I feel I can talk to them directly, and I'm getting the right thing. I don't feel I need to go to you. But paying attention to that, and when you somehow scale to whatever level you get to, if you can feel, if all your audience or your customers continue to feel that, it's just the sky's the limit. And I think when that ends someday, if that were to end, I think it becomes, for other investors in the future, it's just another investment. But I think your current investors, although it is an investment vehicle, there's more passion and direct connection. So I'd encourage you to, continue to focus on that as you continue to scale.
Awesome. Cool. So I want to be respectful of everybody's time. So I'll just gonna maybe give one last question. So we're gonna, of course, as you guys know, we have these mics in front of us and these cameras behind us. So it's no surprise that we're recording this, and hopefully lots of other people will listen to a lot of the great things you said here and get some value out of it. So any last thoughts you'd like to share to somebody who, if they watch a piece of this this video later, that you think would be most meaningful for them to understand or think about as they're considering this investment?
So I can start. I've been an investor since the first time I met you, and you've cajoled the first money out of me. I just cannot believe how successful it's all been, and I tell everybody, if they say, "Well, what are you doing?" I must have referred dozens of people to the organization. I feel very strong about it. I tell everybody they need to do their own research. Every tire I've kicked, every question I've asked, everything I've ever done has always been through all the integrated operations that you put in. I was in the business with Andy for 30 years, and I had to throw in the towel. I cannot compete with this. This is really first class, rock solid, superior returns, real estate, finance, and business building. I think it is the best game in town, as far as I'm concerned. It's the best game in the Lehigh Valley, and you're rapidly, putting that all across the country. So I just cannot tell you how impressed I am with your drive and your vision and the way you treat people. And I would, without hesitation, would be able to tell anybody, and I continue to offer that, anybody that wants to hear firsthand how it feels to be an investor with Don Wenner. It's wonderful. It's not like nothing I've ever experienced in any other business. And I think it's a really good reflection on yourself, and it is a superior return in business. There's nothing like it in the area.
You couldn't, excuse me, I couldn't say it better than Ray. It was very eloquent. I would say that for anyone that has any doubt, they should compare Don, yourself, and the DLP structure and management team with other things that have failed that they might fear. Well, it's too good to be true type thing, and people will always have that question as they're new to anything, including DLP. Just compare the way Don and DLP look and operate compared to these other failures and these other places where you should not invest. First of all, the type of individual that Don is. He's totally open, transparent. He gives constant reporting every month on all the results of all the funds, the performance of all the investments. Every quarter, there's a meeting to discuss, to present, as Don does, everything going on. Every employee is wide open to any question you might ask them at any time. There are third-party audits all the time on everything going on. There is qualifying these investment opportunities on these major exchanges or investment houses. All these things that Don and DLP do, the people that are on American Greed don't do.
Yeah.
Those companies don't do any of those things. The owners kind of back, not quite sure what he's doing or where he's putting your money. There is no executive management team with decades of experience working with Don. There's none of that. There's this individual, or maybe his crooked partner, doing things with your money. Those things you fear. There's no big sophisticated There's a guy that lives this lavish lifestyle. Don lives a frugal lifestyle. They are completely opposite. So anybody that has this question about, it's too good to be true, stop and analyze it. This is good and it's true, and those are too good to be true because they're not good and true. They're bad news. So the whole structure is not like those failures. Those failures, if you look at them a little bit, you realize, you do your due diligence on those structures, they're very, very bad. You don't want to invest there. Look at every one of those aspects, and in every case, DLP is doing it right, and that should give you complete peace of mind.
Awesome. Thank you, John.
I've been invested for maybe 6 years now in many different types of opportunities, and for me a big part, and Ray and John both touched on it, is just transparency. Right, I have access to all the records, I have access to the people, so I think of transparency and tangible. Right, you can actually see everything. You can come here and there's a facility full of people doing things. I have my son working here, giving me reports of what everybody's doing, and he has to scan 5,000 leases. That's so hard. I'm like, okay, well, there's 5,000 leases. I get little data points. So number one, I just think is transparency and such. But the other thing is that. When we first started, to get in, right? You could have smaller, amounts of contributions, and we didn't start with some of the funds that are available today, which I think are excellent, and we're mainly migrating to those. We had more like one-off type of deals, an apartment complex here or there, and you could maybe put different amounts of money. But now, as the company grows for all the right reasons, there's certain limits or minimum requirements to get in, and on the surface, that might be very challenging. For some people. But what I found is that, and I'd like to encourage anyone who would be thinking about this to consider other sources of funds that may not be the funds you're thinking about. I traditionally thought about my money in my bank account. If I had money in a savings account, that was money that I could invest. But you could have money, equity in your home. That, for example, you could refinance at 4 or 5% and invested at 12%. There's 401k money that can be transferred. If you don't meet those accredited investor requirements, there's notes. So there's many different vehicles. We look at our children and have invested. They're not accredited, but we can different. Members of your family can have different needs and abilities, and a DLP provides a variety of vehicles to invest with, and you may find that you actually have access to these assets that, if you think about it, you could leverage them. And I never did that for 30 years. I had places paid off just sitting there, and I no longer own places that are just sitting paid off. They're financed appropriately, and money's been extracted, the equity has been extracted and invested very soundly in DLP related investment opportunities.
Awesome. Lady, anything to wrap us up with?
I feel that if people are cautious about investing with you, that much like what you said, do your due diligence, but it's a whole different concept, because if you have you have these investment funds in other places or in the stock market or whatever, you don't really feel like you can call up and say, hey, how's this going? Or have a quarterly report where you can talk to you and ask questions. So I think if people got to the point where they can feel the connection, that's important. That's been important for us. And it's not just a paper report or an email report that we get every once in a while. We know the people. I think it was a great thing for us to go to the inner circle, because we got to know you better, and your wife and everybody, and it makes us that much more connected. It was a great idea, and I certainly marked my calendar for the next one. So it was really nice. It was a very well done. It wasn't sales oriented. It was just very family oriented and low key, and just very enjoyable time. So
I had a number of friends that have invested with you, but it took them a long time to invest. I had recommended It did, and then I had said to go to the different dinners that you had. They did, and a lot of times they went to 5-6 different dinners, and then finally they were like, "Why didn't I invest earlier?" And a lot of it had to do with the stock market crashed or something crashed, and they were like, "That's it. I can't survive on getting 3 cents out of my savings account. What am I doing here?" And so they did invest, and they've been happy with it.
Well, one last point I make is that, like I said, I've been an investor for a while and I have many different experiences with DLP. So if you have any prospective clients that would like to get a view from an actual client of yours, totally unbiased, please pass my contact information on. I'd be happy to spread information that I've learned over the years.
I have a feeling if people watch these videos, they're going to be asking to speak with some of you. So,
My cell phone number is 610-217-5063.
So you're gonna give them mine.
That's my real number. Give me a call.
wow, awesome.
Always happy to do it.
Yeah, I've called on all of you for that many times. So awesome. All right. Well, thank you, Tina, Andy, Ray, Sue, John, for joining us here. Really gave us a lot of time here this morning. I really appreciate it. I really feel blessed. Similar to Andy hosting an event at his house a few weeks ago for us, just knowing that you're taking time out of work, out of other priorities, out of things you need to do to come be here with us, and for the benefit of us, the benefit of our investors. Doing this is a great honor. Last night, we had 157 of our investors at the event came out to show their support, and it's just an amazing feeling. And they're some of our very closest investors and friends, and just thank you. And thank you everybody who watched here this video here, first ever investor roundtable. Looking to do more of these again in the future, and appreciate your support. Thanks.
This has been Don Wenner on the Impact Podcast. Thank you so much for joining us on this episode. You can check out our other episodes by subscribing wherever you get your podcasts or on YouTube, or check us out online by going to impactwithdon.com. I encourage and challenge you to make an impact.